Good evening. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for Sunday evening. I told you I would do a weekend update. I wanted the markets to open because we had such a wild week to the upside in the futures markets. I want to see if there'd be a change of thinking as we reopen the futures on Sunday night. And it is Sunday night just after, 7 p.m. or so. So we're in an interesting time frame. Now, I am going to be out for oral surgery this week. I wish it was just a root canal or something like that. It's much more serious than that, but I hope not too serious. It's something I've dealt with for 9 months, and I want to get it done one way or the other with the doctor, so I got to go in tomorrow morning, then they cut it out. I go home. It'll be in hospital. Then I come home right away and have to heal. And they said, no talking. They know I have a big mouth and love to do this. They watch me. So it's something I just have to do. And, mouth heals nice and fast as long as you take care of it right. And that's what I want to do. So I wish I could tell you that I'll be back on Wednesday, Thursday. I just don't know the day. I'll be back when I'm back. It won't be long. They guaranteed me that. So maybe I have most of the week off, hard to tell. So I wanted to get this done for you. And I wanted to give you my ideas about the markets. It's been a heck of a rally in this market. Earnings season kicked up to the upside. I looked at these companies and I questioned how much of the inflation is hurting them. Some are big times, others aren't. Look at some of the Snap companies, things like that, and you can see it. But look at other companies, Boeing, they're benefiting under this whole thing. So it depends where you're at. Another thing that I question is just how much of the rate increases between June and July has already been felt by some of these companies. You go to a grocery store, they pass on what they're buying. Their operating margin's this thin. If it goes up, they're passing it. If it drops, they try to pass it. They want to stay competitive. They do what they can with it to maintain their margin, which is slim. But bigger margin companies, different. The big retailers, they didn't back off. LVMH, a great time. In fact, all the big name retailers doing pretty good. So the wealthy are still out there buying. It's the other tier, that middle, be it the Walmarts, the Targets, they've got the problems. They overbought, and we still have the supply chain issues that are going on, and we're still not out of the Chinese problems. Those are things that are going on in the market. In the meantime, gold rallied back dramatically from the 1,700 level, $18 too cheap in silver, under $3 or thereabouts, too cheap in copper right now. So you came back with a vengeance. On the energy markets, nothing has really changed very dramatically, but we heard that Libya today is now back to 1,000,002 barrels a day. Last I saw, they were about 600,000 barrels or so. They've doubled their production, so they've got some problems taken care of. And it's always interesting when that happens. They announced this just before the quotas are going to be set with OPEC Plus, which is meeting right away. So that meeting's right in front of you. We'll see what goes on with the grain markets, and I waited to put this out, 7 right on the head. Supposedly, Russia, Turkey, NATO, they're going to allow some ships out of the Ukraine ports to get the grain that is stored there. At the same time, if you read the news, go to, I think it's Reuters and Bloomberg, you will see that missiles were fired and they killed one of the key company heads of Ukraine export business with shipping yards and all, destroyed him with a cruise missile at his house. So was it targeted? Well, of course it was targeted. Okay, these missiles are pretty pinpoint. You can get a general area where he's at with his family, and they took him out. It wasn't a wayward cruise missile. If you believe that, come on, what's wrong with you? So those are the things that are still going on, and nobody really knows what to believe. Now, as we take a look at gold on a monthly chart, when the market was going up here, go back. These videos are there on YouTube. I said, it'll be hard to break out of that. I don't think you're going anywhere to the upside. Well, I was wrong for part of a month, and then it came right apart. I want to repeat something. I don't think you're going anywhere to the downside. I think that the break you ended up with towards that 1678.40 against the lower band was enough, and you have rallied back now $60, $70. But the trend is down. You still have a pattern of lower highs, lower lows. You're under the resistance of 18, 14, 10. That's the 18-month moving average of closes, and momentum is still pointing down. To really say everything is done, you've got to get up and back over. Now I'm not going to be able to bring it over for you, but way over that high, which is going to be what? That's going to be around 17, no, that's even higher than that, 1875, 60, something like that. Let me come back here. A bounce. This is a weekly chart of closes only. So we've had a nice bounce against that 1,700 level, $50 higher. $50, it felt like so much more during the week. And when I looked at it, I said, it's not a very big rally. It's not like you went from 1,700 to 1,900 like that. When I look at the swing line study on a weekly chart, it's still bearish. You have had since right here, the 2,000 level, all lower highs, lower lows. Bounces occur. You're in a bounce area here. The resistance, strong as can be. 1829.40 to 1834. If you get anywhere near that, I predict that professional money will bail with both hands whatever they can. And I know the public will buy it saying, this is it, we're on our way into the 2000. It isn't where you go short. It's where you let go of longs that matters. That's what I would expect. As you rode the Bollinger Band down these past 3 weeks, you flipped back up, but it didn't break the trend, and momentum lost itself on the downside. You had a market that was embedded and it's turned up. You might get to that point if you can get some stories where they say inflation is abating or banks aren't raising rates. Now, that's the other headwind for gold. You have this week coming up the Bank of England. You've got India, I believe. You've got the Brazil. There's several other, Australia. They're all coming out this week with their monetary policy. Most are expected to go up, specifically Bank of England and Australia, at least 50 basis points apiece. Canada's going to get its jobs data numbers, and then they'll be worried, like we get ours. We get ours on Friday. They're looking for 250,000 jobs, and they're looking at 3.6% again, unemployment. That looks to me like it's this. Hey, I'm the Fed. I got inflation. Let's go another 50, 75 points. What do we care? We got to slow the demand down, and we're not causing job loss. We're staying basically full employment. That's got to be the thinking. The Fed has to get ahead of it. For those of you that think that the Fed's ready to take its foot off the throttle, oh my God, are you wrong? They're going to get ahead of this. At the very least, you have a slowdown of our economy and inflation still very strong, cutting into the wage growth that we saw. Some will call that stagflation. The president and the Fed so far not calling this a recession. The academics are right. You'd have to have unemployment go up. But the stagflation word seems to me to be working right there. And that's not a pretty set of environmental things for the financial environmental things that you want. The Fed wants to get inflation under control. It's not going to be happy with it sitting here. It wants to do that, and I think they'll succeed in it, or succeed in trying to do it. The gold-silver ratio pulling back, but it's still just coming off this 92 level. It was a high. Silver coming up, first resistance point right through here. The 200-day average, let's call it the what would that be, 2058 level. Then the next zone, 2154. You had an embedded reading you lost, so momentum as it comes out of the market takes selling pressure off. People go, okay, that's it. The downside momentum's done. I want to walk away. And you get bounces. But does that mean it's a trend change? Not on this chart so far. Copper, the same thing. I thought that copper, once it started plunging, it did not hold the 100-day average in the Bollinger Band. I said maybe it's going to go to that 200-day average. As it turned out, it did, into the 338 right through here, as you can see, 338 level. Got a little lower than that to 315, in fact, and it has given you a nice bounce. It, too, is losing, present tense, losing the embedded reading. Could give you a kicker back to the $4 level. It is not the place to be short in terms of momentum right now. It's also not screaming buy me. In the platinum market, you have a higher high, lower low. You just lost the bearish embedded reading. Lose the reading, you take off the selling pressure. It's typical to get a bounce. You have two zones, 926, 943.60. The problem is, I teach you're never a buyer for new long positions